We are going to be having a conversation about the digital services tax and the impact is likely to have on SMEs. Remember, the digital services tax came into effect, was it on the 5th of January around there, or the 3rd of January, at the beginning of January? And the first time that now you start filing for DST as you're filing your returns is this month, by the 20th of February. So let's understand, what is digital services tax? Who is liable for digital services tax? But also we'll expand the conversation to go into the other new taxes, for example, the minimum tax. And what does that basically mean? And when should you be paying for it? And what kind of impact is it likely to actually have on businesses? Are businesses going to be able to still continue thriving? Or are businesses going to have a problem with their operations? Right? So this is a conversation that we'll have. But before we get there, Ndu, just maybe you can sample some of those 2 or 3 comments that we're seeing on the previous conversation.
Okay, according to Aguk, the hustler narrative is the greatest deception in the Kenyan history. It excites the poor masses but doesn't offer any solid socio-economic solutions to poverty and unemployment epidemic. Well, there you go. Becky says, if the hustler narrative is criminalized, then we are headed towards a replica of the bread revolution in the 18th century France. The government must address massive corruption and create equal opportunities for all in practice as it is paper. Well, look, I mean, those are the issues that we are dealing with. We can talk about it until you're red in the face. But if you're not going to deal with the issues, then there's a problem.
On the other hand, if you actually don't find a way for the citizens to express themselves and tell the government you have failed, you'll start criminalizing. You have to be patriotic. You cannot talk trash about your own government. Put it in law. You wait and see. Anyway, let's bring in our guest into the studio now. Eric Musau is the Executive Director in charge of research at the Standard Investment Bank, and he now joins us in the studio. Good morning, Eric.
Good morning. Thank you. Pleasure to be here.
Good morning.
Yeah.
Good to have you.
Yes.
Welcome to the Situation Room.
Yes.
That is called the hot seat.
Oh my goodness.
It's not. It's just.
It's not even warm. It's just a seat.
It's just a seat.
I can
right?
see all the red colors.
Bahas. Bahas. When you see red, I mean, we are going to talk about KRA, and therefore we are going to be talking about the red color.
Yes.
There's new taxes that have been introduced this year that were not there last year. Before we narrow down into each of them, just tell us, broadly, what are these new taxes?
Okay, so for the most part, when you're talking about the main one, which has been a big issue, has been the digital services tax. And when you look at the history of digital services tax, it's because of what has been happening globally in terms of economies. So previously, a lot of the trade happening between countries was actually mainly goods. So you had people moving goods from one country to the next and so forth. And if you look at, for example, even in media, you had issues, most historically you had news being spread mainly from, let's say, newspapers. But now increasingly there is digitization, which has really made a big difference in industries. And for tax collection as well, that has also been the case. The impact might not have been severe in Kenya, but in some other countries, corporate tax has actually reduced. And if you look at corporate tax reducing, governments are trying to figure out how do they tap into this digital economy as a new source of tax. And so this has been a major issue. And that's when you are seeing KRA being a little bit more proactive and starting now to tap into the digital economy in order to be able to tax people playing in this space in almost a similar manner as people playing in the goods space.
Are we saying that previously there was no such tax in any form whatsoever?
Yes, hardly. The digital services tax is really a new tax, and it's really focusing on the new economy.
All right. Give us examples of digital activities or digital business or digital services.
So, for example, if you look at Facebook, and maybe Facebook today, there's news in Australia about them shutting sort of media houses. So advertising, for example, historically would come through a newspaper in the country, and maybe government or the journalists would get their news through that mechanism. Now you have Facebook, which is very dominant globally, and it's able to serve advertising in a much wider platform, even and across different countries. So you can host the Facebook technology in one country, maybe a low-cost jurisdiction, and then serve out advertisements across different countries. And in a way, this content will not be chargeable. You have issues like Uber, although Uber now is Uber Kenya, there is Uber Kenya. But you can think about the technology where it's hosted, and then when you think about how you need to tax it, it becomes a little bit difficult, because from a corporate tax perspective, they are not domiciled in your country. So it's important to differentiate it. It's not a value-added tax. It's in a way, it's a corporate tax. So if you're based in Kenya and you pay the digital services tax, it's really an advance of your corporate tax.
Okay.
So strictly speaking, it shouldn't really have an impact. It's just an advance tax, and then you can offset it against your corporate tax. But if you're not based out of, let's say, Kenya, it means this is an amount you pay to the Kenya to KRA in order to be able to do your activities in the country. Yeah.
So who I think I really want to get to, Eric, who is being affected by this? Who runs what doing? Because people are going to be sitting right here listening and saying to themselves, how does this affect me then? And am I going to be required to pay something come the 20th? Am I going to be required to pay something by virtue of the fact that I'm using social media? Am I selling goods via? Am I selling on the internet? Am I selling via an app? Am I falling into this space? Very clearly, who's affected?
Yeah, so if you are selling goods through a platform, so the platform itself is the one being targeted. So strictly speaking, the only risk is if they passed on, for example, that tax in terms of higher commissions, or, so if it's Jumia or if it's maybe Amazon, they could decide, for example, to pass on the higher fee, what they could call a fee, but it's really a corporate tax to the people using the platform. But strictly speaking, that is really not the intention, and there's really a lot of debate globally in trying to get a harmonized tax system for services. So, for example, historically we've always had a harmonized system on goods, but services have always eluded tax authorities, and there's been a lot of discussion to try and come up with a harmonized mechanism. And you
can about digital services here.
Yes, digital.
Not just other services.
Not just other services.
Yes.
And one of the key issues is that you can understand why it could be problematic to multinationals, because if you are a Facebook and you have like 50 countries, each with their own digital services tax, it means every time somebody posts an advertisement, you kind of need to track where each advertisement has been viewed from, and therefore pay that relevant tax for each country. That's why, as an ideal way, you need a harmonized system the way we have it for goods. And services is not the same as goods in the same way, because when goods are coming in, even if you have different regimes, it's easier to manage that, because the goods are just
there's a port of entry.
Yes, but now for digital, it becomes very complicated, and that's why they're trying to target. If you have an e-learning platform, for example, how do you pay tax on it, and how do you normalize the playing field between a company operating locally and providing the service locally, and a company operating locally and offering the service on an international basis. So that ultimately that was really the main objective, and it's a major debate going in terms of trying to get consensus as to how that's going to be done.
You said that KRA is being proactive in this, in going all out and saying, all right, so let's start by introducing this.
Yes.
But have they invested in the back end to have the infrastructure to be able to monitor and enforce this taxation?
Well, they say they've made it easy for foreign companies offering platforms to be able to pay the tax, because that's one of the key challenge most of because the fee itself, the figure itself is not really big per se in itself. I think a country like France had suggested 3%. I think the figures could be high in other countries. So in itself, the figure is not big, but it's the logistics and the impact when it's implemented on a wide scale that's going to that's really a concern. And one has to think about, for example, also Kenyan companies trying to operate in other countries. Because also that's, I mean, we are assuming we are net recipients of services. But it may well be that Kenyan technology companies are domiciled in Kenya and they want to offer services across the border, maybe in Uganda or in Tanzania, or even across Africa or the world. I mean, there's this, the technology initiatives around Kenya are quite significant. So there's a need to ensure that even as we discuss trade in goods, your tea, your coffee, your flowers, there's need to also now consider how do we get a harmonized position on the people providing services so that it also makes it easy for our companies to be able to trade globally. Of course, at the moment, the main concern is that those taxes are mainly targeting U.S. companies, which are dominant on the space. If you think about your Microsoft, your Google, and so forth. But there's no reason to think about the future and Kenyan companies providing services to other countries and what kind of environment they would face when they go outside the country.
And already there are Kenyan companies that are offering digital services, being domiciled here, but they're offering them maybe around the region or across Africa or to the world. When you think about these digital services, we could categorize them, and there's some people who would look at it from the main digital companies, like now the way you said, Google, Facebook, Twitter, and the rest. And then you can look at e-commerce platforms. For example, you think about the Jumia, Alibaba, Gigi, and the others.
Yes.
Now, if we just come into the e-commerce platforms, for example, Jumia is offering a platform where individual merchants come and sell their goods through this platform.
Yes.
So it's basically this shop, and you've taken up a stall.
Yes.
So who is to pay the tax? Is it I, the merchant, or is it Jumia, the platform?
It's Jumia, the platform, that is paying the tax, essentially.
Okay.
Remember, I think one of the other things to just remember is that if you're operating in Kenya, there are certain taxes that you're already obligated to take. So just because you close your shop, your physical shop, and go online doesn't mean you avoid paying VAT, or doesn't mean you avoid having pay as you earn. There are those other obligations which were already there in legislation in the first place.
Yeah.
Of course, now for KRA, it's a lot easier to track you if you're suddenly online, because they're able to see you. You probably can't disappear per se, and that's also another angle, because most of the, especially small and medium enterprises, maybe they started off small under the radar, and so carrier couldn't resource-wise, was just difficult to reach them. But then suddenly now when they're on an e-commerce platform, all these other taxes start applying to them. So of course Jumia would still pay its the fee, that the advanced tax, essentially the digital services tax, but it also means they can provide the data to KRA in the course of them paying for that digital services tax. And at that point, KRA can be able to see, oh, these are your merchants, and then look at the details. Okay, have these merchants be complying? Because also KRA doesn't want people to close the physical shops and go online and avoid all the other taxes that are supposed to be paid in the first place. So there's that element as well. Those taxes already existed, and they were already in law, and it's things that should have been complied by SMEs in the past. And I think that's also another angle, because most SMEs, especially when you're selling a few things online, you're thinking maybe this is really not much, it's maybe a side thing, but then KRA kind of wants to have its share in all this.
One of the things that was mentioned about you is that you're an investment banker.
Yes.
I really want to understand, what is investment banking?
Well, investment banking is, we're essentially an intermediary, and we're able to link up investors with people who want to provide capital. So if you want to make any investment and you come to us, we can potentially direct you to a variety of investment options. Just in the same way banks link depositors and lenders, for investment banks, we link providers of capital and investments. So that's kind of the analogy that I would put in a nutshell.
I'm going to ask for an example.
So, for example, if you want to in the simplest manner, to trade in equities or shares, you want to buy a Safaricom share, you come to us, we'll be able to facilitate you to buy shares of Safaricom in the Nairobi Securities Exchange. You want to invest in government securities, we'll be able to, you come to us, we'll be able to facilitate that. In a more complicated manner, maybe not, if you are a company and you want to raise capital, and maybe you've reached a point you want to raise maybe 100, 200, 300 million, you come to us, we'll arrange the relevant documentation in compliance with the Capital Markets Authority, that's our regulator, and then we'll try and place your issue, let's say if it's your shares or if it's a bond you want to raise capital, we'll be able to find investors for you. If it's a public offer, means we can go out there and shout about it. And if it's a private offer, we kind of, there's a limit under the regulations as to how we can approach investors. And for us, we also have a new product recently, which we launched on our global markets platform. And this allows investors to be able to invest in global instruments indirectly. So they give us the funds, and we have a team of professionals in our asset management arm who are able to invest in foreign exchange instruments, indices, and so forth. And that the foreign exchange, and that is under the foreign exchange trading regulations. Because you remember previously there used to be a lot of people being conned about investing in the foreign exchange market. And so now there are regulations in place. So if you want to play in that space, you really have to be regulated, and those are the regulations that you are licensed to operate. So there are a number of things that an investment bank can offer, and those are some that we offer.
I want to ask you a question that is actually unfair.
Yes.
Is there any business, enterprise, or entity in this country that is not taxed?
I wouldn't think so. It's almost. I think they usually say, what are the two things which death and taxes?
Those are the two things that are sure.
Yeah, so if
There are certainties.
If you're probably not being taxed, you're probably breaking a rule somewhere. I'm almost certain of it.
Why I ask is this.
Yeah.
With this digital taxation that we're talking, digital services tax,
Yes.
do we have an idea of what the Kenya Revenue Authority hope to raise in terms of sums? Is there a target?
I don't know whether they have a target, but it could be significant. I mean, there's a lot more trade happening now on digital platforms. People are buying software online, even outside the country, and those companies providing the service in Kenya do not pay that service. Because, for example, if you go online and download a particular software and you pay for it using a credit card, that amount, that company, let's say in Europe or in the US, doesn't pay any tax. So in the current environment, what will happen is that for such a company, they'll have to actually pay tax on it. So if you think about the volume of e-commerce trade maybe that happens online, I think, and COVID has accelerated, the adoption of e-commerce and trading services. It's likely to be, wherever it starts, it's probably going to be going up over time. I would believe it's something that will grow quite significantly, probably in the billions.
Let's take a break at this point. We're having a conversation with Eric Musau, Executive Director in charge of research at Standard Investments Bank. Coming to understand what digital services tax is all about, which SMEs are liable to pay this digital services tax, how you pay the digital services tax. Is it a new taxation? Is it part of, bigger, older tax? And then what impact is this likely to have on the thriving digital economy that we are seeing in the country? So very many people who are now launching their businesses online. Innovation is one of the things. Is it going to kill that innovation, or is it going to move it underground, or is it going actually to benefit the traders?
This is the Situation Room, the only way to start your day. Spice up your life.
Understanding taxation, and especially this morning, the digital services tax. So, Eric, you're saying that this tax is basically an advance tax on your income tax, your corporate tax.
Yes.
This is what it's not a new. It's not a new tax per se.
It's not
an additional tax.
It's not an additional tax, and the main impact will be on multinationals, not based out of Kenya.
Okay.
Because if you're a Kenyan company, you're probably already paying some level of income tax. So yeah, it's really it shouldn't really have any impact per se on your normal businesses.
The only challenge here, though, is for the Kenyan companies that are operating online. So you have this company and you're operating, you're running your business online as, like you said, merchant here. You have presence on these platforms, or you're just basically taking advantage of a platform such as Facebook to advertise your business. Facebook even has a column for shops where you can actually go and sell. So you are also being targeted indirectly by this particular tax.
Well, I can see where you're saying it's
because I'm offering
targeted.
Digital services online, or I'm offering a product.
Offering goods.
I'm offering goods, but I'm selling through a digital platform.
So what KRA wants in terms of to differentiate you with the person who has opened a shop is that you're not paying rent. That should be really the only difference. But otherwise, if the goods have VAT, or if you have employees, you need to pay as you earn. And annually you need to have your income tax filed. So that's all KRA wants to ensure that just by going digital, you're not avoiding all these other taxes. And of course, by introducing this, it means from a disclosure standpoint, KRA might be able to know who's operating some of these platforms. Online. And it's not unusual KRA doing this. And we know in county governments, KRA just goes, finds who are the suppliers, and you go
they work backwards.
Yes, and then because the county government provides the list of suppliers, they look at what kind of services were provided, and they counter check with their systems to confirm whether you've paid all the relevant taxes. And I think one also has to be aware about the bigger picture. You can imagine if you have two businesses, one which is fully complying with the relevant tax measures, and another which is avoiding paying tax. It means one business will be undercut and might even close almost unfairly when you think about it. And over time, it erodes the tax position of the country. And if you have a business which is not paying the relevant taxes, also it means it's probably not treating its employees in a particular way. There are all those, the SSF, NHIF. So the idea is to try and formalize the economy as much as possible. And if you look at, for example, our economy, the number of jobs created by the formal economy, it's roughly 10 to 20%, the formal economy. And for an economy to really do well, you can't have such a high level of informalism. You need these businesses to formalize and really move away from just being small businesses and really provide gainful employment. And for the country to be able to plan really, we talk about aid, but I think when you look about the impact of taxation as well, if you have good taxing capacity, you're able to do a lot more things as an economy. Of course, there are all those other issues about how the money is spent. But I think for KRA, they usually say that their work is to collect, and they're putting in the effort to collect.
The spenders, ask the spenders.
Ask the spenders how they're spending the money. But at the end of the day, there's really a case to ensure that that KRA does its work and it does fairly. And you can see even in most of the tax corruption scandals that we've seen in the past years, most of those companies were not tax compliant. You see somebody registering a company A Limited, B Limited. If you think about it, this is a company which is unlikely to be compliant.
Yeah.
Because for each company, you need to have registered for VAT if you're supplying goods to the government. You need employees because you can't be turning over hundreds of millions of shillings without employees.
Yes.
You need to pay corporate tax. And also it reduces corruption. When you think about it, if you're paying taxes and compliant to the strictest sense, it's very difficult to be corrupt. Because if you're corrupt, you must pay that from in fact, your dividends. And by the time you're making your dividend, it means you've paid 30% corporate tax and maybe a withholding tax. So by the end of the day, almost half the money really must, of every bribe that you're paying, if you're paying a bribe of 2 million, strictly speaking, on the gross, on the profit side, you must have generated at least 4 million.
Yeah.
I hear you saying then to build what would be looked at by many as a sustainable business environment in the country, then a lot of these businesses must be formalized.
Yes.
And formalization of business then invites things like taxes, which a lot of people, I don't know that they're afraid of paying tax, or a lot of companies are afraid of paying this tax, individual small businesses paying this tax, or afraid of what might be slapped on them in the future by the taxman.
Yes.
Right? That's the fear that, all right, let me just operate in this little space where nobody can really see me because I don't know if they're going to come and take a chunk out of my earnings. How then do you balance this very, very valid concern by people who have small businesses who may want to operate within the rules of conformity by the taxman against a country that wants to be viable in terms of business economy?
Yeah, I think it's a big challenge, especially for SMEs, because most SMEs do not have that financial advisory or accountant in place to really tell them about the incentives. You know, KRA assumes that, you know, as any business, you've looked at all the rules and all the incentives that have been provided under the rules. And when you're filing, they assume you've already taken advantage of all those. Because, for example, KRA doesn't, okay, you provide your details. KRA will only ask you to file on your profits. And it's self-declaration. You put all the details of what you do. If it's an employee you've paid, if you're paying them less than 24,000, I think it's zero tax. So it's just, what they want is for you to just file, because that doesn't really impact you that much. But I can't to get a sense that sometimes SMEs do not know the advantages offered under the law. Sometimes it's also quite onerous for small businesses to file the numerous number of taxes. In fact, even on the ease of doing business as a country, while we've seen a very tremendous improvement, if you look at the element of doing taxation, of paying taxes, one of the key metrics there is how much time businesses in Kenya take to pay taxes.
Compliance is expensive, Eric.
Yes,
I'm telling you.
yes.
It's completely expensive. And you want to comply, but it's expensive.
Not even expensive. It's cumbersome also.
Everything.
Yes. I'll tell you the figure. It's 180 hours as at the 2020 Ease of Doing Business report.
180 hours per SME.
Per SME?
Well, that's the average that was computed. And that's why, of course, when you think about ease of doing business rankings and you ask why are these things important, it's because when you go into the nitty-gritty, it really has major impact on businesses.
Yeah.
And one of the ways, if you look at the complexity of business, now you have this level of complexity from a tax perspective, and you have SMEs without professionals, because, big organizations, like the Standard, you could have an army of accountants just being able to track all these taxes.
And tax advisory companies employed on retainer.
Yes. but you can imagine the challenge of an SME where it's just you, maybe 2-3 employees. It's a big challenge, and maybe one of the issues is how do you simplify the tax regime for SMEs? How do you make it easier for them to operate? So that because sometimes you realize you're a small business. If you get an accountant, you realize suddenly you are underwater because just the cost of compliance is almost taking all your profits.
Yeah.
And that's really something that KRA needs to look at. It's been trying. I mean,
How have they been
trying? Can it not be made easier? I mean, let's if we can look at this just really simply.
Yes.
Somebody runs a business
Yes.
that sells one product through the year, Monday to Monday. Why can it not be made as simple as possible from the literacy to the actual operation to the execution? Why can't it be made simple? And if we're talking about formalizing the entire informal sector, for example, just that sector without looking at anything else, why can't it be really as simple as ABC? Why must it be so difficult? Why must it be so cumbersome? Can you imagine 180 hours over 365 years taken out to do, 365 days taken out to do something like this?
Yeah, I think
And it makes it, for me,
And you're just
short of
filing
wanting
nil
to
return.
sound illegal, it makes sense to me then why people will say, you know what, I'm not going to do this. I'm not going to bother.
it's a big concern, and they that's why at some point they introduced the turnover tax. So the turnover tax was to try and sort of limit the documentation level required, so that just based on your turnover, pay a percentage of that, and you're okay. And then I think they limited the turnover.
But does turnover have any reflection on the profit that you make?
No, it doesn't, and that's now the other issue, because now some businesses might be happy with the turnover tax, but some businesses, based on their margins, will not be happy with that. So for them, that will not work for them. And that's why. And then you also had the other initiative they had was on rental tax, because remember, rental tax previously used to be 30% of your profits, and a landlord needed to do all these calculations, expenses, depreciation. So they said, okay, if you're a landlord, you own properties. I think you earn a rental income of less than a certain amount per year, then you can pay 10% on the gross amount. And don't bother keeping books, or we won't look at your books. And that has had a big impact, especially on rental income, because now if you are a landlord and you're earning 100,000 on your property, you just know, okay, 10% of 100,000, it's 10,000 shillings, and you pay every month.
Yeah.
It's a much easier tax, and they've had success, for example, in the bucket of landlords, and that has worked quite well. They've been trying to rope in the county governments to try and see can businesses pay some of these taxes through
the business permits.
Through the business permits. So the initiatives have been there, but of course if you need to pay, if you have now employees, it's a bit of a challenge, because it means you have pay as you earn. So on a monthly basis, you need to do pay as you earn. If you are doing viable goods, you need to do VAT.
Yes.
And then you need to do NSSF, NHIF.
Yes.
In fact, if you look very carefully at the rules, you have other trainings, other levies,
Yes.
to really comply to the dot. And you realize all these things, you go to different platforms. Of course, KRA, you do maybe pay as you earn, VAT and income tax.
Then you go to NSSF.
You go to NSSF.
You go to NHIF.
Platform,
you pay.
and then
You
you
go
pay.
to
Dizzy,
NITA,
best.
Then NSSF, you go there and
National
do
Industrial Training Institute.
Yes.
You pay.
So you can imagine, as an SME, it's almost impossible to be fully compliant. And you can imagine the challenge. It means this SME can never bid for government business. The only people who can give business is because if you ask for a certain level of formalization because you want to assist, let's say, the youth, but if they can't comply with a lot of these regulations, they'll never be able to qualify to even get to essentially access one of the biggest spenders in the country.
So isn't it in the interests then of a body like KRA or even other government agencies, isn't it in their interest for people to be compliant? And in order to be compliant, then it's in their interest to actually make the steps a little bit easier.
Yes.
For businesses to actually be able to follow and not have to do 1,000 platforms to be able to pay this, that, the other thing. You want people to be compliant, right? It makes
Yes.
your job easier. You have more in terms of income. Isn't it in their best interest to do this?
It is, and they've been trying. I mean, they're all in these initiatives. If you read the details, they say, we are working towards digitization. We want to make it easier. Maybe there was an initiative to try and bring in all the taxes and your NSSF and HIF in one platform. I think that's one of the initiatives, so that if you pay, you just pay once. You just fill in all the details and then you pay once. My sense is that sometimes maybe it's not the government to do everything. It's to, for example, if they have an open systems from a technological platforms providing, for example, open APIs and allow innovators to link into government systems securely, and let different innovators come up with different ideas as to how let people compete as to how they can make it easy for SMEs or any business to actually comply. So, because if you do that, it may well be possible that a private business might be better at trying to figure out how to make it easy for businesses to pay tax, and at the end of the day, as you mentioned, it will be for the benefit.
For their benefit.
Sure.
To their credit, though, let's just give credit where it's due. KRA periodically goes all out. For example, they'll conduct all these trainings, seminars, and workshops. Come to KRA. We are now today training you on how to comply on VAT, how to do this and the other, how to file this, and understanding this and that. But they require you to take your time off your business to go to their office and spend time learning, and then you go back and start complying. Now, my feedback to them is, come on. You want somebody to basically just drop everything that they're doing every week. They'd be coming for one training or the other.
They will not come.
You need to make it easier for people to comply. On the other hand, they also go all out again to start advertising and using, digital platforms, for example, on these digital services tax, to have influencers who will go out and convey the message that this is what is happening. Using people like Eric Musau, for example, go and explain to people what digital services tax is all about. Good way of doing it. But they're all disjointed. And in the end, you have already started, you have brought in a law, you're already implementing it, and that's the time when you're training people to comply with it. You can imagine the kind of confusion that there has been. Turnover tax was confusion last year. Then there was minimum tax, confusion. Then there is now digital services tax, confusion. And it doesn't matter. After the 20th, penalties start accruing. Come on. Isn't there a better way that this can be done?
I think also as citizens, we need to really look at our constitutional roles quite significantly. Before these regulations are implemented, normally they are published in advance. They usually ask for feedback. There are some which sort of come in, but by that time they still have to go to Parliament. They are debated. Of course, we have the ones who've elected people in Parliament to make a decision. Some of those decisions to. So at the end of the day, also,
so someone can tick a box somewhere and say, look, there have been opportunities for public participation here, here, and here. There have been opportunities for the citizen to engage and understand the law here, here, and there. And I have no obligation to make sure that they do that, to make sure that they understand.
They try. I guess the question, and the question, for example, of online training, I've seen them. They're now doing like online training, because sometimes you see the emails. I'm sure sometimes people worry, if I go for this training, will they take my details?
Exposed myself
and start following me? but I think you can just join anonymous. I don't think the trainings are usually quite separate from, and they're really doing it genuinely.
Right.
So sometimes I think also there's that history. And when you've had engagements with them and you've had a trouble and you just go in advance and explain, you realize it's manageable, and they actually want to enhance compliance.
But you see, Eric, for that to happen, they need to communicate what you're saying. You see, you can do all these wonderful things, but if people don't know about them, or better still, they don't understand them, they're not useful. Okay? I like giving an example of the Central Bank of Kenya when they wanted to change our banknotes. that campaign, I still marvel at the beauty of that campaign. You cannot say you are not informed. They used every avenue possible to ensure people got to understand. They said to understand the deadlines, to understand what they were doing, to understand what you needed to do, the time you're given to. All that was done. Now, KRA has a very specific job: just collect money from people. Now, surely these people you collect money from, don't you think you do a far better job with far less resistance if you had some understanding which emanated from you? Because if you don't tell them and you don't explain, they will remain with the mindset they have and they will resist your collection. Okay? And your relationship will be adverse. It doesn't have to be. So I'm saying, you say they keep trying. What is it that KRA has done to remove this adverse feeling that people have towards them? What have they actually, not what they have tried, what have they done?
I think tax is a very sensitive matter. And it's an important question that you're asking. My sense is that also professionals in that space need to play their role. I mean, you have accountants, the tax advisors, maybe ISPAC, because when you look at legislation around taxation, I mean, I struggle to understand it, and I've done significant level of finance. And I still need to read quite a lot. I really doubt, for whatever effort that KRA will ever do, whether they'll ever really be able to educate the public fully on each individual circumstance from a tax perspective. They can only do it from one bucket to the next. The main role would be for tax advisors. Maybe have ISPAC, so that, every time you think, if you're sick, you go to a doctor. For your tax matters, you really need some sort of...
You pray to God.
You need a tax... you need an accountant in a way.
Well, yeah. Most people...
Or technology.
But Eric, if you're employed...
Yes.
You are taxed. You don't
Somebody
even have a
takes care
say.
of it.
It's just chopped off and it goes
Somewhere.
and it has gone, isn't it?
That's correct.
Yeah. So, and then you wait for your employer to sort of like give you this sheet of paper that shows what you've paid in the course of the whole year and so forth. Not much of a problem there.
Yes.
But then these are the citizens who don't have that particular luxury, and they make a living by doing some form of business. Okay? Now, why am I giving this example? Look, you in the bank, up until COVID struck, one of the things that banks didn't do very well, you didn't take the time to explain to your customers how they can manage when they have a problem with paying back what you lent them.
For commercial banks.
I'm talking about commercial banks. Yes, he is in a bank. So
I mean, although investment banking...
yeah, he's in a bank, so he doesn't
doesn't
escape
lend
from it.
people.
A bank is a bank is a bank.
A
When
bank
CT
is a bank
concerned.
is a bank. Okay.
I hear you.
He didn't start off as an investment banker. He was a banker, and then probably moved and specialized and became that. No, this isn't fault finding. I'm simply saying that the experience was you got a rude letter from the bank that was essentially threatening your life.
Yes.
Now, the net result of that over the years was that when people owe money, they go into hiding. Instead of simply walking up to the bank and saying, folks, I'm having a problem, blah, 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 blah. Because that aspect of communication was not done well enough, my perspective. So I'm saying KRA, given that they actually don't have a problem with money, they're always collecting it anyway, from a layman's perspective, it's something they can do better. That's really what I'm saying.
No, in fact, that's a very important point. And bankers, I think, have gotten criticism around that particular issue that you've just mentioned. And I remember I did my banking. Well, actually, I was a banker before I became an investment banker. I mean, one of the key things when you're doing lending was that you needed to tell the client that if you run into any trouble, come talk to us before it is due.
Yes.
Because you're probably, because you're probably, if you're an entrepreneur and you need to pay an amount, or you are an employee and your job has fallen away, you'll know it like a month in advance.
You do know.
So what the banks do essentially is supposed to go and talk to them, and they'll be able to structure something.
Yes.
So the only thing is that how do you communicate this? Now you have these automatic loans. And then you have also other lenders who are now these other lenders who might not maybe follow the same level of professionalism as the other commercial banks. And then if you are slightly, for the big businesses, they'll probably be aware that they can approach their banks, and they probably have been doing that over the years.
Yes.
But if you are an individual, probably no one has ever taken the liberty of just telling you, if you're in trouble, you just tell the bank in advance before the loan falls due, and they'll probably be able to work something out with you. I think these are now issues which are now emerging in a crisis that that are important, that really as professionals that maybe we should have played a much better role in informing the public.
A quick one. In terms of matters that have risen as a result of this crisis of COVID, we had a lot of people now who went into informal trade using online platforms to be able to sell. And there's a lot of anxiety right now in terms of, all right, so I've started this business because I lost my job or I needed some additional form of income. I'm selling products on Facebook, I'm selling on
Using WhatsApp,
Instagram. And now folks are wondering, are we going to get slapped with some sort of tax now moving forward that me now selling my goods from the comfort of my home or my car, whatever, that I might now fall into the hands of the taxman?
Like, if I'm looking at KRA properly, I don't think they start at the very bottom. I mean, they start with guys who are evading like a lot of money, and typically those are the ones you see in the newspaper. But very soon they keep sort of lowering the threshold. So I think the sooner somebody just sort of joins into the system, understands what kind of obligations they have, the better it is, because that's the only way they're going to have a business which is sustainable, and also protect their assets. Because you can imagine, sometimes even the principal tax is not a lot. And in fact, for most SMEs, if you're not careful, they're mostly loss-making. I mean, if you're a big business, if you're loss-making, you get a tax loss carry forward, meaning that in future when you make a profit, you're going to offset against the loss you made this year with the profits of that. So you not pay over time until you make profits. They have things like depreciation, which is a cost if you have interest. So sometimes also small businesses just do not take advantage of the breadth of incentives that are provided under the law. And so sometimes in fact, for most of SMEs, the biggest concern is penalties, not necessarily principal. Some might be principal, but those ones would be also very rich people. But for the most part, you'll realize, if you're a company and you fail to pay just one obligation, it's like 20,000 shillings. and then 20,000 shillings, you realize maybe even the principal you're supposed to pay was like 2,000 if you just did the calculations. Then you realize KRA is really more. And if you stay an entire year, let's say on VAT, and you don't file every month, that's 20,000 times 12. It's a big obligation, and it may well be that you're not even doing a big business.
And you'll be out of business shortly. Thank you very much, Eric. Eric Musau is Executive Director of Standard Investment Bank. He deals with research, and we'll be talking about the digital services tax and other taxation measures that have been rolled out by the government through KRA. Eric, like you have said this many times, many SMEs do not know. Many SMEs do not know that the advantages that they can take, with the tax laws and the tax regimes, that they can even maneuver this situation smoothly. So how is it that SMEs can get to know? I mean, of course, I know you're going to tell me the SMEs the entrepreneurs have a role to play by ensuring that they understand what they should know. But who else has that responsibility?
I believe professionals in the industry. I mean, if you're an entrepreneur, at least you have a friend who's an accountant. Talk to them in confidence. Go to the website of various platforms. I think ISPAC launched a platform to try and do something on the tax space. And that's really important, because also you need to figure out your profitability as a business and viability long term. And you also don't want to risk your other assets by getting into a business which is not viable. And so at the end of the day, for SMEs, you really need to know your space. Also, just understand your business. At the end of the day, it may well be that that business is not viable in the manner that it's working. And so, I mean, it's a big challenge, but I don't know. It's something that we all need to solve together as professionals and as a country, even as politicians, the government as a whole. So, and we have many players in government. I know if you're looking at manufacturing, there's Kirdi, industrial, and you go there and you walk in and you find people ready to help. But I think government is also quite big, and you kind of need to really walk out, try and sort of just walk into these offices. You'll find people willing to help.
Or even letting people know that this information is there. You know, the thing is, if you don't hear that it's there, then you're not likely to go out and look for it.
Yeah, or join
the
an
thought is that
industry.
there's this iron sheet that you can't get through.
Yeah.
Or join an industry association, maybe like even there's a Juakali association, and be like, okay, well, if you're in Juakali, if you're in a particular industry, and maybe now through that, maybe it might be a much better safe zone to sort of get the relevant information relevant for your industry, or creatives association and so forth.
I think also industry or professional bodies, like you said, bodies such as ISPAC, for example, they also should take it upon themselves as a responsibility that they have to ensure that they train as many people as possible in the basics.
Yes.
They are the ones who are the carriers of knowledge. What does ISPAC do, for example, to build the capacity of people in the Juakali sector? You can work with those associations, the Juakali Traders Association and such, and say, come together, you guys. We'll be visiting you, and we'll be sending someone to come and talk to you. If you've got any questions, someone who from ISPAC is coming to talk to you, deal with you, pro bono even.
Yes.
But just to make sure that people get to understand. And that's how they'll get business for their junior accountants as well.
That is true.
Eric, thank you very much for joining us today. We'll invite you again for more of these conversations.
Thank you. It was a pleasure being here and having this conversation.
Asante sana.
This is the Situation Room, the only way to start your day. Spice up your life.